What is going on, recruiters, search firm owners, and all around beautiful people? This is Headhunters Live coming at you. Well, live. It's been a few weeks, but we are back. Well, at least most of us are back. For those folks who know me, I'm David Stephen Patterson. You may know me as DSP. And right over here, we have what I like to call the big boss, the big cheese, the head of honcho, the man behind Boss Back Office Having Solutions, my co-host Neil Lebovitz. What's going on, Neil?
That is the sweetest intro to date out of 175 episodes. No abuse, no insults.
Not today. Not today. Well, you know what it is well, Chris isn't here today, unfortunately. Chris,
that's true.
who's the best looking man in the biz, he's out. So it's just you and I and our guest Michael Napolitano.
Yes, sir. Yes, sir.
Well, we have a great show for you today. By the way, I don't know, Neil, are you frozen on your end? Look, it's frozen on my end. I don't know if
it did freeze, but it's odd. Can you hear me?
Oh, I can hear you just fine. Yeah. Okay. Well, hopefully we'll be all right. Well, that's it. We have a great show for you guys today. Michael Napolitano. So this is a guy that can really set you guys straight when it comes to finances. You know, as I know a big portion of our audience are independent recruiters, and even the folks who aren't, right? Maybe work for another firm, but you know, as recruiters, we tend to be very bad with our money. We make big placements, we spend big money, and we don't seem to manage it very well, right? Because we're kind of gunslingers by our very nature. So Michael is going to come on the show and help set us straight on how to manage our money, both to build wealth as well as maybe potentially to sell your practice. So before we do that, though, I do want to ask you guys, if you could, if you're watching live right now, please comment live so we know that you can hear us. Give us a like, give us a love, or just show us some damn emotion. Give us the angry button. We don't care, but show some emotion. Share the show with your friends, everybody that you know. And before we get started, I do want to bring up our two amazing sponsors. And I say they're amazing, not just because they are our own companies, but they actually are very great sponsors. So for those folks who don't know, I help build sales marketing systems for independent recruiters and small search firms. It's a complete done-for-you service. The website you can go to check out a 12-minute video on our offer to find out exactly how it works, to find out exactly what we build, go to realdsp.me/build. So go there, and if you're interested, you can book a call with myself, one of my team members, and we walk you through the program step by step by step. Now, Neil, as I mentioned before, him being the big boss, well, his company, the Back Office Staffing Solutions, they handle all of your back office needs when it comes to temporary staffing or contracting. Look, at the end of the day, you know, we make, as I mentioned before, we make big placements, we spend big money. And one of the problems with recruiting is that's always up and down, right? So if you want to smooth out your revenue, get some recurring revenue in your life, and actually kind of de-stress from the business, consider getting into staff augmentation, contracting, temporary staffing, whatever you want to call it. The reason why a lot of people don't do it is either they don't know how to do it, or they're afraid of all the teeth of the workers' comp, insurance, the payroll, all the legal like liabilities. I mean, this crap has teeth, right? So it's very lucrative, but also can be a little dangerous. So you want a company like Back Office.
Wow, you were just like the infomercial guys on late at night.
I know, I'm getting good at this.
Wow.
But I'm telling you, Back Office will take care of everything. The workers' comp, the insurance, the payroll funding, the freaking collections, right? And they had a really cool app that's all branded, so you're going to look a lot bigger than you really are. So all I got to do is go to backofficenow.com to get started. All right. Neil, anything else you want to add to that, sir, before we bring on our special guest?
So nothing about Boss or Digital Headhunter. Although I'm curious, you have the real DSP and then you have digitalheadhunter.com. What makes you choose one over the other?
Well, it's just shorter, and it's like a redirect link, so I can have like the one link, and I can change the destination, right? If I change pages and whatnot. So it's kind of like almost like a portal, if you will.
Got you.
Yeah.
All right. So I want to say about Michael before
let's bring him on. Michael, here we go.
You should know, Michael, there he is. I want to introduce you. And David already did. But what's important to know is Michael's a guy was introduced to me as the expert CPA in the staffing and recruiting industry. And it's impressive. His firm is a top 20 nationwide CPA firm, so really sizable. And guess what they specialize in? Our industry. So I refer Michael all the time. I always get people on Facebook groups saying, "Hey, who do you know in our industry that's a CPA?" And Michael's awesome. And welcome to the show.
Thank you, and hopefully I can share the same energy as an accountant. And I appreciate you having us.
Now, before we dive in, I do want to share with you, Michael. And you go by Mike or Michael? Would you prefer?
Michael, you're not cursing at me. I'm good.
All right, perfect. Well, Michael. All right, so I'm sure you've gotten this before, but as a bit of a Ron Paul libertarian myself, I can't help but notice any relation to Judge Napolitano, the famous libertarian.
If I get pulled over, I'll pull that card and say yes, but unfortunately, no relation. And he is from the same area in North Jersey that I'm from, but unfortunately, no relation.
Okay, I know where I used to watch a show like years and years ago, and I don't know if he's still on anymore now, but yeah, he was fantastic.
Like a Judge Judy kind of thing, or was it more of?
No, it's more politics, economics. I mean, he has very much in natural rights, and so I learned a lot of values from actually watching him early on in my political evolution. So it's so he has a special place in my heart. I'll say that, him and Ron Paul. But anyway, with that being said, we're not here to talk about that. We're talking about staffing, especially finances. So I guess let's start there. Like, walk us through what do you do for staffing companies and recruiters, and from there we can kind of dive in to some topics.
Yeah, so thanks again for having me. And just for background, we work with well over 200 staffing firms, both on the executive recruiting side and on the contract labor. And you said something earlier about making the switch to contract labor. And Neil and I were talking about that, how you really need to have the right professionals, in your ear when you make that transition, if you're thinking about it. And that's the beauty of working with so many staffing firms, is we've helped those executive recruiters make that transition with the help of people like Neil and other industry partners. So I think it's important for everyone to understand the role of your accountant. Your accountant, typically you think of us this time of year, it's tax season. You want to get your taxes done. And you don't want to wait till then, because it's too late to do anything that you could have done in 2024 in planning for year end. So we work with our clients on company structure. That matters. Registering in states, that matters. As everyone knows, we've gone into a remote workplace. So we have executive recruiters that have no bricks and mortar. Everyone is remote. And that provides different challenges from a state tax, nothing difficult. So we really want to help our clients with compliance. We want to help them with profitability. So we look at all aspects of the business, get to know the business owner. What are your goals? What's your short-term goals? What are your long-term goals? How do we help you grow? How do we help you with infrastructure? AI is a huge conversation. Neil and I go to thousands of conferences, it seems like. Maybe not thousands, but a lot. But AI it's here. And what helps working with so many clients, a client may have a question on a certain system. I can reach out to another client who's using it and get an honest opinion. Is it worth something exploring? Is it not? So that's where having a concentration in staffing really helps our clients.
All right. So I have two questions. First is a little bit of a silly question, but as an accountant, given with what Doge is doing and all the cuts they're making, all the money they're saving, when should I expect my check?
So listen, maybe they can incorporate the same technology to get those payments out faster.
But in all seriousness, though, when you look at, let's say, your average, okay, let's talk about your average independent recruiter, because a lot of folks who listen to this, they've started their own little practice, hung their shingle, and they want to grow, right? What would you say are some of the biggest mistakes that recruiters are making when they go independent? what are some of the biggest mistakes that they're making, and what can they do to like fix those mistakes and actually become more financially, I guess, aware of their practice, right?
No doubt. I think it's a transition. So we work with a lot of recruiters who come from a large firm, Robert Half being one of them, who basically are like, I want to do this. I can do this on my own, make my own money, and totally agree. But great recruiters does not mean you know how to manage people. So if you're doing it on your own, there's only so much you can do. There's so much time in a day. There's only so much bandwidth you have. So when you start growing, managing is extremely important. Or if you bring on employees, managing those employees. And not everyone's great at it. So that's where we can help, either through us helping bringing in third parties, but also managing money. You said it earlier, you have peaks and valleys, and spending. And it's understanding your cost structure. It's understanding how much business you have to bring in as you're increasing your costs. So there's a lot of details once you start the business. Oh, still here?
Yes, yeah. It's I don't know what happened there.
That was weird.
Up until start the business.
Yeah, let me make sure we're still live. Maybe Neil, if you could check your group
as I'm broadcasting.
Yeah, no, we're still live. Still live on our end. Okay, I don't know what. All right, anyway, sorry about that, Michael.
I figured you had enough of the accountant already. I'm like, all right, thanks everyone.
Yeah, it's like a little thing they pull you out on the Academy Awards with the
hook. Yeah, you got the hook,
right?
That was the Night at the Apollo, isn't that where they do the hook? Remember that show?
I don't know. I've seen it on so many comedy shows.
Yeah, you're showing your age as well with that one.
Yeah, that's a good show.
That's hysterical. You're talking too much, so I'm going to literally pull you off.
I like it. We could use that. But yeah, so it's important that you have the management skills to grow in understanding, again, cost structures, because you're getting into a little bit of legal, the contracts. You got to have contracts. Where'd your contracts come from? You have to have the right attorney. So what's great with accountants, and it's an overused term, quarterback, but someone who's in the industry can make all those right introductions to make sure, A, you're protecting yourself, you're protecting your assets as you're growing the business, but more importantly, as you grow and you hire, building the foundation, foundationally building the business to manage that growth. So that's where we can help. We can be your eyes and ears. Don't think of us accountants as waiting till year end. We should know what you want to do in advance to help guide you. You want to go and hire a recruiter in Illinois, but you're based in, Texas. What does that mean? Texas has no income tax, but now you hire someone in Indiana, that could change a little bit of your tax structure.
Yeah, let me ask you something. When I posted a week or two ago, people asked a question about the CPA in the industry who could help me, and I referred them to you. One of the people posted as a response to that, who cares? Just get any accountant or CPA. They'll do what you need. And so answer that. And I see you shaking your head. No. What's the advantage to dealing with someone like you that's what you know? That's all you do.
Yeah, I mean, certainly, again, if you just want to, pay the minimum amount to someone at year end, you may save a couple $100 or $1,000, but it could cost you dearly if your structure is not set up correctly. So, you have to think about entity selection, S Corp, LLC. I've seen new clients that were set up as C Corps, which is not an entity I would ever advise. So you may save a couple $100, but it could cost you tens of thousands in additional taxes that you were not even aware you were paying. In addition, we spoke earlier about value. If you're not in tax compliance, which is not difficult, you just have to be in compliance, and now you want to sell your business, and the buyers are extremely diligent and smart. And if they see you haven't been compliant, guess what that does to value? Guess what that does to them thinking, wait a minute, if they're not compliant in taxes, what else are they not compliant with? So it's not a tremendous cost to have a great professional, but they can add so much more value, save you so much more money from the very beginning. Where do you set up? What state do you set up in? All of that. Do I need to file in these states? I'm thinking of going to California. No, you don't want to do California. California's tough. But if you're going to go there, here's what you need to know. So that's where having a great professional can provide that guidance and not have to fix a mistake, but help you do it correctly from the beginning.
Well, I like also that you end up, all of your network are people associated with staffing and recruiting. So if you're dealing with them and you see an issue with workers' comp, let's just say, and you'll refer them to someone that's really good in the industry that knows staffing workers' comp, for example.
Absolutely. So we attend about 9 trade shows, conventions a year. I spoke at American Staffing Association 2 years in a row. And because we're so embedded in it, when we see a client that has a need outside of accounting, we refer in those industry experts that are going to know your business. So you don't have to train them. You don't have to explain what you do. Especially when you get on the contingent side, workers' comp, Neil, is huge. It's a huge cost. People don't understand with the right workers' comp provider, you implement safety and training can lower your comp rates. And a lot of these generalists don't know that. And workers' comp is huge. Your state SUI taxes. Do you need to register to do business in a state? Certain states, especially if you're doing temporary staffing, you want to come to New Jersey, you better register or you get fined. Indiana, you better register or you get fined. So this is where having that local knowledge, you don't have to train us about your business. We know your business. And my objective is do what you do, sell, make money, let us help you with the foundation, the compliance side. So you're not trying to figure it out. And Google isn't always correct. Google will eventually get the answer you're looking for, but it's usually not right.
All right. So yeah, but beyond that, though, I guess let's bring it back down to like what can a recruiter do? So again, let's say they start a business, or let's say they've been in business for a while, or they do direct hire temp, beyond working with an accountant, but just in terms of just setting themselves up financially, like what would you say are some of the best practices that recruiters should keep in mind, in terms of their finances and how they can like build wealth in their firm?
Yeah, so I'm glad you said that, because your business should do 2 things for you. It should create income and ultimately build wealth, right? So right now we're worried about income. How do I maximize my income and how do I maximize my cash flow? So there's tax efficiencies, and how you structure that business and how you run it. Also how you build wealth. The whole point of having an LLC, and what I see quite often is people will have investment accounts within their business. We're going to build our wealth inside. You don't want to do that, because now you're taking away the protection of an LLC or S Corp. The whole point of protection is to prevent anyone from getting to your personal assets. So if you start accumulating your wealth in the S Corp or LLC, God forbid, and it probably won't happen, but if there's a major lawsuit, those assets are exposed. So little things that we can do to help protect what you've earned. Now you've earned this money, what should you do with it? We can give you the guidance on that. How do you maximize your income from a just running the business? Do I need to hire this type of person? Can I outsource instead of, we get this all the time. Should I hire a bookkeeper? No, you can outsource that. You don't need to spend that kind of money. And then we have the resources to hook up our clients to say, go to this person who can provide this service at a low cost and save you money.
Excellent. Okay. All right. So beyond that, all right. So let's say you get the right financial systems in place, use an accountant, right? Let's say as you start to build your firm, let's say I want to maybe sell it in 4 or 5 years, right? I want to have some sort of exit because, again, I want to build that wealth. What should I start doing now to pave the way for a successful exit?
So when you're trying to grow the firm, and there's a couple of things to think about, like common questions we get is, we have multiple recruiters. How do we divvy up the income? How do we pay each other? So there's a lot of questions once you have partners, right? When you're on your own, it's easy. You do everything yourself. You make all your own decisions. But now Neil and I, we want to join forces. Well, you need an operating agreement. An operating agreement is what's known as a prenuptial agreement. So if Neil and I, 2 years from now, want to get divorced because things aren't working out, you have this operating agreement that spells everything out. How do you value the firm? How do you split everything? But that operating agreement may also dictate how you get paid. We're still going to be an eat what you kill. Even though we're partners, we're going to pay ourselves based on how much revenue we bring in, and then we'll whack up the expenses, equally. What decisions are made? We want to hire a recruiter. I disagree. You want a recruiter. What do we do? So that operating agreement, it's almost like growing up, right? We're growing up. How do we protect the golden goose? The golden goose is the business, right? You want to protect that. That's generating all the revenue. So this is where we get into the weeds, is once you bring in partners, what does that mean? Decision making. Now you build the wealth for M&A. So I think we had 14 or 15 M&A tractions. We probably do probably the most staffing M&A, or one of the highest number as an accountant. So we help you on understanding value and how do you build value, right? How do you grow your revenues? And in your world, anyone looking to buy you, they want to know your processes, your systems. How do you source your candidates? What makes you unique? What makes you different? What's your process, your programs? What's your discipline, your industry, geography? So all of this is what a buyer's going to look at. And are you a generalist? Do you have a specialty? Usually generalists don't have the same value proposition as someone who's a specialist, who's built a name and reputation in that vertical. So all of that is how we can have these conversations and saying, all right, let's earn income a couple years, but how do we build that wealth and value?
Okay, interesting. All right, so I would like to go back to what you mentioned prior, which was you got the LLC, the S corp set up because it's to protect your assets, right? So let's say I start making some really good placements, start making some money, and making an extra couple $100,000 a year. If I want to make it right now, what should I do with it? So if I want to take it out of my company, how do I do that? And where should I put it?
And that's a great question, because depending on the type of entity that you are, an LLC versus an S corp, there's two different forms of payment. If you're an S corp as an owner, you go on payroll for a certain amount, but you don't want to go on too much payroll because it comes tax inefficient. And this is where we get into the weeds with our clients. We explain the difference between an LLC and an S corp. An LLC gives you much more maneuverability if you're bringing in partners and you want to have unequal profits paid. An S corp gives you more tax efficiencies, but is a little more rigid, where profit distributions have to be based on ownership. So that's where we want to get to know the owner. What is the future? What are your plans? Should you be an S corp or an LLC? If you're an LLC, you just take distributions. As you want the money, you take it. That's all you need to do. You don't have to, there's no payroll as an LLC. It's just profit distributions. If you're an S corp, you have to have a certain piece that's payroll, and then the rest are profit distributions. And then we walk our clients through it. Everyone's different. Some want to get paid monthly, weekly, bi-weekly, semi-monthly. And we work on that. How do you do that? What expenses do I put through the business? I want to buy a Range Rover. It's over 6,000 pounds. That's the biggest question I get. Can I fully write it off? And the answer is sort of. There's always little nuances that we have to make our clients aware. And what else can I put through the business? Home offices are huge for executive recruiters. So what does that mean? What can I put through as a home office?
That's a scary red flag, right? Isn't that one of the biggest audit red flags?
It's always been a lightning rod for the IRS to audit. What's changed, Neil, a little bit is with COVID. Right. Home offices are now very routine, but there's still a higher chance of audit. So we'll work with our clients on, okay, here's what you need to keep, have all this in order. You have nothing to worry about because you can have a home office. But you're absolutely right, Neil. It's a higher rate of audit.
Well, that's it. How does that work? Like how much of your, let's say your mortgage or your rent, whatever you happen to, how much of that can you actually write off on your taxes?
So real simple, the way the IRS works with home offices, and use easy numbers. You have a 2,000 square foot home. Your office is 200 square feet, it's 10%. So you can take 10% of your mortgage interest, real estate taxes, utilities. We allocate, your internet, we can allocate cable, home telephone. So it's mostly a percentage of your office space as compared to the house. So that 10%, we can allocate those costs. And why do you want to do that? Because in high tax states like New Jersey, California, when you're limited on your real estate taxes at 10 grand, and let's just say your taxes are 20 grand, now I can take a piece of that to reduce my self-employment income. Because self-employment income is subject to a higher tax because you got to pay FICA and Medicare twice because you're the employer and employee. So these are not to get in the weeds and bore people, but this matters because in your world, as you go from making 200,000 to 300,000 to 500,000, an LLC versus an S corp matters because an S corp will give you tax efficiency as you're making more and more money. So that's a real conversation you need to have.
I got you. Interesting. Okay. All right. So let's talk about mistakes. So, again, a lot of these folks coming in this business, they're very, again, we're gunslingers, right? We're like, we're salespeople. It's what we do. We're not super analytical. We're not detail oriented. We're good at selling and closing deals. For a guy like that or a guy like that, what are some of the mistakes that you see? Someone comes in to work with you the first time. You're like, holy shit, what the fuck are you doing? Right? What are some of those mistakes that people are making right now that they can avoid?
What I love what I do, and Neil, I'm sure can attest to this, is I have clients that will attend seminars, conventions, and they come back, oh my God, we had this guy tell us this. What an idiot. He didn't know better. But as soon as they get in their four walls, they're doing the same thing. So that you hear it, but how you run your business. So easy things. Understand cash flow. Cash flow is the driver of your business, and you have to understand your cost structure. For our new executive recruiter, you're starting their own firm, is you really have to understand your 12 months of expenses. What does it really cost you? So you're maintaining the proper amount of cash in the business, right? How much do you need? What is your monthly operating expenses? If it's $10,000 a month, how much reserve do you want to have in there in case you hit that downturn, right? Where, all of a sudden you go several months, if you're not placing or things aren't hitting you, the last thing you want to have is that fear that you don't have enough cash. So be responsible in understanding the business, and cash is king. Understand how much cash flow that is needed to run the business, and you have enough in reserve. And also save for the rainy day. Too many young recruiters, you said early jokingly, but it is so true, spend every dollar that they make. The other one is, especially if you're a solo recruiter, put away for retirement. Being self-employed allows you to put a ton of money away for retirement, and trying to tell a 30-year-old at times that you should be putting away 25,000 a year in retirement, sometimes they don't understand it, and you need to understand the compounding of your investments. So when you are a solo recruiter, a SEP plan, you can put away $69,000 a year into retirement. And we see so many young executive recruiters that aren't even thinking about retirement.
What is a SEP plan?
So in the retirement world, everyone knows a 401k, right? You can contribute to a 401k, and you can have one. A self-employed plan allows you to put 25% of your income into a retirement plan up to $69,000. It gets expensive though if you bring on employees, because you can't discriminate. If you bring on a new recruiter and you're paying them 50 grand, you'd have to put 25% of their compensation into a SEP plan. So a SEP plan is great for the solo recruiter because you can pile in retirement. Once you add employees, then you would want to think about more of a traditional 401k profit sharing plan, where you as the employer are not contributing tens of thousands. You want your recruiters the ability to put away for retirement. You may want to match and contribute a little bit. 401k allows you to determine, do you want to match 3%, 5%? So retirement is huge, especially for the solo recruiters.
Okay, interesting. Yeah, it is true. So many other recruiters never think about it because at the end of the day, we're recruiters. We always think we close on the deal. That's there's old saying in recruiting. Uh, uh, what was it? Everything gets better when you close a deal. But,
Nothing
closing a deal
better than
solves all
closing a
problems,
deal.
basically, which it kind of does. At the end of the
But
day,
what's great from a cash flow, what a lot of business owners lose sight of is if you put 50,000 away in your retirement, that's a $50,000 deduction. You're in a 30% tax bracket. That saves you $15,000. So that 50,000 really only costs you 35 because you're getting such a tax benefit. And sometimes when you present it that way, it makes more sense to make those retirement contributions.
All right, so I do want to ask another question. This is the libertarian in me wants to ask this question to see what you would say. I say kind of jokingly, but is taxation theft? And there's only one right answer.
Taxation theft.
Is taxation theft?
Oh, unfortunately, my world, there's two guarantees in life: is death and taxes. Unfortunately.
Yep. Oh man, I was hoping to get an answer out of it. But is it yes?
I'll
or
leave
no?
it at that.
Leave it at that. Okay.
Very political episode for you, David.
What was that, Neil?
Political episode for you.
Hey, it's near and dear to my heart, man. Taxation is theft, but that's just my opinion. Don't take financial advice from me, and the worst person to take financial advice from. All right, well, all right. So let's see this. As we start wrapping up here, pretty soon, like what would you say? Maybe some advice you can give to all the recruiters watching this that are maybe younger, and who don't have much financial management experience or financial acuity. What advice would you give them this year to kind of set themselves up?
Yeah, 2025. So I think we're heading into a period, hopefully, where the good news is we know taxes aren't changing. So with this administration, not to talk politics whatsoever, but we know taxes are going to stay the same. So at least we have that. For the new recruiters, you're going to make mistakes. It's going to happen. Having the right professionals will limit those mistakes, right? We don't want to do anything fatal. Start slowly, understand your cost structure, understand the reality is when you form a company, it's important you have the right professional. What type of entity? How do we get started? How much money should I put in to start the business is a question. Do you want partners down the road? What does that mean? What's the roadmap if I want to grow this and have partners? So does the entity matter? So all of these questions is what you should be asking your accountant. What do I need as a foundation? And I said it earlier, you're recruiters, you're great at sales. That's what you should focus on. Have the right professionals so you're not wasting your value your time, I think is what I was told at a young age. Value your time. That means invested in your business and have the right professionals. It may cost a couple bucks, but it's a
Happen again.
Might cost a couple bucks, but is what we heard.
Yeah, sir.
Yeah,
I don't know what happened.
Yeah, that's interesting. But yes, professionals will cost you a couple dollars, but I can assure you the right professionals are going to pay much higher dividends in setting you up for success so you can run the business.
Well, it's like mow my lawn. I don't pay somebody to mow my lawn. I pay somebody to do it because they're the specialist in that, right? I might value my time more than trying to figure out how to mow my lawn, and same thing for the accountant, right? I mean, they're specialists what they do. Pay them for their time so you can do what you're good at. No, I definitely get that.
Yeah,
for sure.
And having the industry expertise allows us to answer the questions and not say, oh, Mr. and Mrs. Client, give me 24, 48 hours. Let me research it. So chances are we've experienced it. And it's not just tax advice, it's general consulting. It's running the business. We deal with a lot of employee issues. I want to have an agreement with my top recruiter because I don't want to lose them. What incentive plans can I use for my recruiter? I just had an executive recruiting firm call where we talked about phantom stock. How do I retain the recruiters? So retirement plans are good, right? What do you offer that your competitors aren't? We have a retirement plan. We're going to contribute 3%. Neil is my number one recruiter. I don't want to lose him. How do I get some glue? Phantom stock. All that means is if you sell the company, I'm going to give Neil 5% of the proceeds. He never has ownership, but there's something there to keep him. A lot of my recruiters are terrible at bringing in their own recruiters. So what do you do to differentiate yourself as a firm to attract the top talent?
Interesting. Yeah. In fact, speaking of that, so Jeff Kay talks about this a lot. If you know who he is, Jeff Kay was really built Cave Aspen, and then from there Sanford Rose. Anyway, a big mentor for me. And he always talks about make your firm attractive to other recruiters because that's how you grow your firm. Is that you really need to be the sort of place where recruiters want to be able to give up a portion of their top line billings to be a part of it, whether it be part of the culture or for more of a shared services sort of deal. But yeah, I think a big part of that is doing things like having phantom stock and offering other things like ownership, because for a lot of recruiters, you can make $250,000 a year sitting for a kitchen table, but they want more. They want more wealth building opportunities, and there's obviously wealth building opportunities when you combine recruiters together and you're all working towards a shared purpose and yada yada. So, but you're right. That's a big part of it. You talked about
another big part I'll throw in is commission structure. I think a mistake a lot of recruiters make is they're shorting the commissions. In essence, saying, I don't want to pay 50%, I want to pay 40%, it's less. I would say my top executive recruiters, their goal is to pay the recruiters because they're going to produce. You're going to make more money by your recruiters bringing in more business. So don't get cheap on the commission structure. Be fair and reward those top recruiters. Increase the commissions as they are bringing in more business to incentivize them to continue to bring it in. It's going to make you more money as the business owner.
I've generally seen, and this is, I've worked with a lot of firms, and I've generally seen for their search firm owners that calculate this. Most firms I've seen typically pay usually it's like a 50 to 60% total comp before, the insurance and taxes and all that kind of jazz. But 50 to 60% is typically, from what I understand, is kind of where most people want to be. Now, it might end up being, let's say, you're paying maybe a lower commission for the first 100K, and then it ratchets up, and then maybe
correct. Yeah, you want to set a minimum. Exactly.
Yeah. But 50 to 60% is kind of where you want to be typically, and anything above that, it's getting a little bit. Then you're not really as profitable.
Agreed. Right? But we'll see, some new business owners always trying to be on the lower end, and you want to attract the best recruiters. So just be aware that being light on the commissions is not where you want to be. You want their recruiters to produce and be hungry.
Penny wise and pound foolish.
Thank you.
Is there okay? So another question I want to ask, and this is a little bit not really off topic, but it's something that I've been wanted to ask for a while, because I get this question in our Facebook group occasionally. More and more recruiters are starting to hire people overseas as contractors out of the Philippines, Latin America, Eastern Europe, all the usual places. What sort of teeth should people be aware of if they're going to be maybe hiring a sourcer, for example, out of the Philippines, as an example? How should they pay? What they should be aware of? How does that work from an accountant's perspective?
Yeah, that's an area you definitely have to speak to your accountant on, because it gets into a little more on the tax treaties that we have with the various countries. Can they be a 1099? Because they're overseas? Is it a company that you're retaining? Is it an individual? So what's interesting is I have an office in India. We have a 400-person office in India. So India, Philippines is typically what we're seeing. Mm-hmm. But we're seeing now South America. So we're seeing more labor force in the Americas due to time zone. The one problem with India, Philippines is you have a big difference in time zone. So I'm seeing, the last convention I attended, we're seeing more and more outsourcing firms sourcing their workforce from South America. So it's interesting the shift we're seeing.
Yep. Can be an hour time difference, you know?
Exactly.
Interesting. Okay. All right. Well, I think it's well, Mike, I think we start wrapping up here pretty soon. I guess let me ask you this: is there anything that you want to leave with? Any kind of, I guess you could say, any final party words of advice?
And share how they can get in touch with them in his firm.
Oh yeah, and that too. Yeah, we'll talk about that as well. But yeah, any party words of advice?
Yeah, I would say you got to have fun with it. I look at my most successful clients and they build a team around them. I think where I see issues are those individuals who want to control everything. They don't want to build a team around them. And again, you're going to limit your income as a solo person, right? So have fun, manage, bring in the right people and the right professionals. That is going to help you build the organization from the ground up, build it successfully, profitably, and do what we said earlier. Focus on your income and then focus on your wealth. But have fun with it. Do what you do best. You shouldn't be figuring out taxes, your legal documents, your insurance policies. It's not worth your time. So bring in the right professionals is my number one recommendation for everyone.
And I did have one more libertarian question to ask you before we wrap. Is there a way to depreciate my copy of the Constitution since it's constantly under attack?
My God.
I'm not sure the life of that, but you know what? I'll use Chat GPT, see if I can find something.
Okay, well, I got a million of them. Sorry, I had to do it.
I should have known.
You're a good sport. Thank you. I appreciate it. I've had that joke in back my man for like a long time. I finally got a chance to use it. All right. So if anybody wants to reach out to you, if you guys can go to here we go. So you go well, one of two ways. Go see or go to Michael's LinkedIn at Michael-Napolitano- and a bunch of letters and numbers. So probably best thing to do is just type in Michael Napolitano in the search bar and it'll pull up, or go to citrincooperman.com and then now can they book a call directly from there, or how do they
if you go to our website, do search, you can just search for my name and send me a message. It'll have my email, everything, and be more than happy to answer any questions that anyone has.
Excellent. Thank you. And also I forgot to mention this earlier in the show. For those folks who want some additional training, Neil and I have a training tomorrow. For those of you who don't know, we've been running for every few weeks. We do a session called Foundations on learning recruitment, and we're actually holding the class tomorrow in the Syndicate. You can go to the syndicate.chat. It's going to be tomorrow at 1 p.m. The training is going to be how to take a world-class job order. So go check that out, completely free. All right, Michael. Thanks for being on the show, man. It's been a fantastic show. It was fun. I'll tell you what, it's about as fun as I can have talking accounting and finance, which actually.
Well, I appreciate that. We try not to be your typical accountants, but I appreciate it. Thank you very much.
Oh, likewise. And all right, guys. Well, thank you for watching, everybody. If you guys can again share it with everybody that you know, like the show, love the show, hate the show, whatever. Just give us some emotion. And with that said, I will see you all next week. Bye, everybody.
Thank you, everyone.